Hello everyone and welcome back to the channel. This is Fair Value Finder and today we're taking a look at another requested stock. This is Sinclair Incorporated, ticker SBGI. This is another media company and this is going to be a pretty quick video it seems because although it might be undervalued, definitely do not like what I'm seeing here. So we can just start by looking at the graphs because that tells the whole story here. We see the revenue declines. They did have a decent 2020, 2021, but are on the decline from there. A little bit of a bounce back in 2024. Earnings are not looking good. They came through this last year with earnings of $37.54. And today, or this year, they're only expected to come in at $2.60, $3.20 going forward. So not the best numbers here. We see some negatives, some very low numbers for the net, gross, and EBITDA. The fact that the gross profit is the lowest for 2022 tells you that there's more that goes into that number, and it's an accounting thing, not a revenue thing. The balance sheet we see here, we have negative tangible assets. They are on their way to positive. But the assets in total are just on the decline rather quickly. Liabilities are on the decline. The graphs look fairly similar, and the tangible book value is making its way back to the positive. With the way that everything's trending, all of these numbers are going to be pretty close to zero here in a couple of years. Cash flows, no consistency here. Pretty flat around that $600 level there. We have a lot in that range. 2021 very low, 2020 very high. Dividends, they're not a dividend grower. They held their dividend at 80 cents for the first 3 years, and then they rose it to $1, and it doesn't look like they're going to be raising it, so we just hold at that dollar price. And as for the price, here's everything graphed out by fair values or reasonable values for those metrics. So the share price, everything is clustered very tightly together here. That's why it's so difficult to read it. It's definitely led by the cash flows, which we saw no consistency in. And it is lagging in typically the earnings. The earnings look to be about in line with everything this year and the last year. They were exceptionally high. But we can go back to these metrics, just take a look at all of the things that we look for. Revenue, declining, red flag. Expenses as a portion of revenue, kind of all over the place. They went from 91 to 77 to 99 to 86. So, I mean, it kind of looks like progress, but 2021 threw that out of whack. Earnings per share, we've already touched on. It's getting cut down to a tenth of what it was, less than a tenth of what it was the prior year. The earnings yield does look okay, though. 18.6% is pretty dang good. The share count, they have been decreasing it very consistently, which is probably what's helping with a lot of their balance sheet. Their free cash flow yield looks good, just like their earnings yield. Their free cash flow, it was all over the place. Just for the balance that we have, it is essentially on a decline. Looking back at 2019, it was higher than it came in 2022. The tangible book value, we talked about how that was negative, but it is on its way towards being positive. Debt to equity, significantly more than 1. So that is a huge no. ROE, we saw that exceptionally high. Net profit that really jacked this up to 3 times the shareholders' equity. But in the past, 2021 was a decent year, and looks like it was jacked up in 2020 as well. but in 2019 they came in at 3.1. So again, not showing consistency, and even when they do, the reasonable numbers are towards the low end of the range at best. But we're looking at this thing for value. It's definitely not getting a buy. I don't really want to give it a hold because we are seeing declines in the revenue, but I think I'm going to have to give it a slight hold, leaning towards the sell. We see fair value of last year was $261.62, led significantly by those earnings of $37.54. That was followed by the cash flows coming in at $196, and the balance sheet and dividend are very close at nearly $29. This year, if they come in on projection, they'd be looking at earnings value of 36, significantly down from last year, but it is over the current stock price. The cash flow of 153, their cash flows are just crazy. The balance sheet of 46 and the dividend of, again, just shy of $29. And moving forward one more year, projecting things out, we get earnings going up to 45, cash flow going back up to the 190s, the balance sheet getting up above 50, and the dividend holding flat just shy of $29. So this year we'd be looking at a fair value of $61.40. Going forward, it'd be $74.39. So our margin of safety, we'd want to buy this stock somewhere in the 50s or below, which it's definitely at. But there's just too much not right with this stock. I don't like almost anything that I'm seeing. It doesn't look like the market does either. They don't care what the fair value is if it's not showing any sort of consistency or quality. It's just another company on the market. Now, if they can turn things around and start to prove that they are growing the revenue, they're consistent in bringing down their expenses as a portion of that revenue, getting that earnings per share climbing at a sustainable rate. They went from negative 30 to 37 in 2 years. So there's a lot of accounting going into this that's messing the numbers and making it hard to get a good actual picture of the business. Now, we could dig deeper into it, but just on the face here, I wouldn't want to waste the time. So my consensus is hold, leaning towards sell. I believe that there is some value there, but it's not something that should really be held in any sort of quality portfolio. It would be a very speculative investment. So thank you guys for watching. Please like if you enjoyed the video. Comment what you think about the stock, if I missed anything, if there's other stocks that you want me to look at, and subscribe so you can keep up to date with everything. There's a lot of earnings coming out. I'm about to post the calendar for what the next few videos are going to be looking like. And I'll catch you guys next time.